Hello and welcome everyone to the week ahead commodity report for the 30th of July to the 3rd of August 2018, presented by myself, Phil Carr, at the Gold and Silver Club. So firstly, today we're going to have a look at the precious metals, and into the close on Friday, silver has closed up just over 0.5% on the day, trading at $15.45, and gold closed flat on Friday at $1,222 per ounce. We did see the metals get some support later on in the session after the release of US GDP data, which showed the strongest quarter in nearly 4 years for the US. But essentially, there are still worries regarding the trade war and that trade frictions would be a drag in the second half of 2018 for the US economy. So as such, we did see the US dollar sell off on Friday, and that has provided some support to the precious metals here. As we go into next week, two major news items that you should definitely have in your trading diary include the following. Wednesday, we have the FOMC statement, and Friday, we have non-farm payrolls. Both of these, of course, as we go into August next week, can be big movers for commodities, especially gold, silver, typically provide some really great trading opportunities on the precious metals. That's Wednesday, the FOMC statement, and Friday, we have non-farm payrolls. So if we have a look at the US dollar and we have a look at the price structure here going into next week, into the close, the US dollar does look weak here, but essentially the US dollar index still does remain within a range at the moment. We've been unable on the US dollar to break back above the 95 level and close above that level, so we keep seeing failed breakouts above that zone which don't materialize with any follow through to the upside. At the same time, the US dollar is creating higher lows here on the chart. Another point to note is that speculators have lifted their net long position on the US dollar to the highest level since January 2017. So where we're poised at the moment will likely be a bit of a decision point here as we go into next week, as we transition into August, as to whether the US dollar is going to hold support and we have another retest back towards the 1-year highs here if the dollar does not break down any further. But of course, it could also be a turning point if the US dollar continues to roll over next week and we break through support here and we have a close back below the recent channels here and consolidation. That could also lead to a potential low getting formed for gold and silver. Another point to note on the precious metals, particularly silver, is the gold to silver ratio. So the gold to silver ratio on Friday broke down and we're almost at the point where we're going to break back below the weekly lows here. It wouldn't take much for the gold to silver ratio to continue to follow through next week, break below the weekly lows and start moving back towards 78 to 1. So typically when the gold to silver ratio sells off like this, it favors more upside on silver versus gold. And in fact, on Friday, silver was one of the strongest performers out of the commodities and certainly was leading with respect to the precious metals. So next week, we will be watching out for the following on the gold to silver ratio to see whether we do break below the weekly lows here, which reside at approximately 78.5 to 1. If we were to see the gold to silver ratio break below that level and then start to head back towards the 78 level, it would be very likely that you would see silver break out. And silver has been consolidating over the last week at approximately $15.25. It's had several retests of that major level of support, which so far have held. We can see we've got a bit of a basing structure which is forming at the moment on silver right at the lower Keltner channels. We'll have a look at the levels on silver here, both for the buy side and also for the sell side. So in order to get follow through and a breakout, what silver really needs to do is clear above the weekly highs here. So we need to see a break back above $15.62 in order to get additional follow through. The next level of resistance then resides at $15 and approximately 85 cents. So that's if we were to get a full-on breakout here for silver next week. It could actually happen on the FOMC statement, which occurs on Wednesday. If we were to see some follow through here, and if silver does get supported going into next week, those are the next key levels that I would look at for a potential basing formation. Now on the flip side, if silver does not follow through next week and we have a reversal and a retest back towards the recent swing lows here, $15.25 would be an important level for silver to break in order to see a revisit back towards the previous swing low here, which resides at approximately $15.15. And then below that, of course, we've got a very key psychological level of support, which resides at $15. That's if silver does not get supported where we are at the moment and just turns out to be a bear flag and a continuation pattern to the downside and then retest $15. Those are the two major scenarios that I would look at going into next week. The gold to silver ratio at the moment is suggesting that the low could be in here for silver, but it needs more confirmation. So the gold to silver ratio needs to break down further next week, make a move back down towards 78 to 1, and then we'll likely see that inverse correlation follow through with silver with a breakout to the upside. And you'll note the gold to silver ratio, when it breaks down like this, typically favors silver going up versus gold. So if you have a look at the gold price structure here on Friday, gold is flat on the day on Friday. It has been consolidating over the last week. Gold has been trying to catch a bid at approximately $1,217. As of yet, it's been unable to break and close above $1,235. So we're within a very range-bound market at the moment with gold. But again, gold tends to have some big moves on FOMC statements and also non-farm payrolls. The levels that I would look at next week on gold are as follows. If we do get a breakdown below the recent consolidation here, and let's say we break through the recent swing low, which currently resides at $1,211, the major level here for gold resides at $1,205, and just below that, of course, $1,200. That will be a major psychological area of support if we were to see a break below the recent swing lows. That could be a level that gets tested approximately $1,200 to $1,205. However, if going into next week gold holds on to $1,220 and we then make for another retest back towards $1,235, and if we break out of this consolidation and close above it, then we're likely to see a fairly large move. We could get a breakout back towards $1,245 and possibly over the month of August back towards $1,200 and approximately $63 to $65 on a follow-through breakout move here. So that would be if gold is able to pick up momentum next week, break above resistance, close above that level, fill the recent breakdown in price there, so essentially have a breakout back towards a recent level that was breached over the month of July here, taking the price back to $1,248 and then a follow-through move taking the price back towards the monthly pivot at $1,267. So that's what we're looking at the moment with respect to gold and silver as we go into next week's major events, including the FOMC statement on Wednesday and Friday's non-farm payroll. Now moving over to crude oil, 2 points to be aware of as we go into next week. One of those is that hedge funds and money managers have cut their net long positions on crude oil for the second week in a row, citing increased price volatility due to geopolitical risk and recent trade tensions as well as a factor in the reduction of net long positions on crude oil. US energy companies also added oil rigs for the first time in 3 weeks on Friday, which again had a bit of a negative impact on oil prices into the close on Friday. It's actually a very important week next week for crude oil prices to see whether we do get follow through from the recent breakout that we've seen this week, or whether we start to see a corrective move lower and we break below a potential bear flag formation which is developing on crude oil at the moment. If we have a look at crude oil on the weekly chart here, we are coming back for a retest of a 12-month trend channel which so far is being supported. So I would look out for this next week, certainly on higher time frames for oil as well, to see whether we can clear above the weekly highs and then get some follow through to the upside, which could represent a good buy opportunity, or whether oil just rolls over and whether we get a break and a close back below this major trend channel which has been in place over the last 12 months. Now again, going into next week, we have the FOMC statement, we have non-farm payrolls as well, two major news items which will definitely move commodities significantly. And if you want to find out more about that at the Gold and Silver Club and join us for our live trading room program, you can certainly do so. So here are more details on how to join the live trading room. So if you want to be part of a community of successful traders, then join us on our live trading room program. At the Gold and Silver Club, you have access to live trade alerts delivered via WhatsApp, email and SMS. You have mentorship, expert advice, in-depth market analysis and trusted insights, so you can know earlier how to act quicker and maximize on every trade opportunity. For more information and details on how to join the service, please go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, fill in the application and we will get in touch with you ASAP. Also, make sure you subscribe to our YouTube channel to be kept updated with all of the latest commodity reports.